how to find entries using the break of trend. Okay, so if you look at this here, this is a clear uptrend because we're making higher highs. Okay, we're making higher highs and we're also making higher lows. Let's call that higher low. Okay, I see higher low there. I hope the higher low thing is easy to understand. So this high is higher than the previous high, so it's a higher high. This other one is higher than the previous high, so it's a higher high. So price makes a high, makes a low, makes a higher low, higher high. So this is what we call an uptrend. When you're drawing your trend line, you come and you take your trend line, and usually once you click on that, then you're able to draw a line. So what you want to do is you want to have at least 2 touch points, okay? So you draw your trend line and that's it. Now, we're in an uptrend, okay? And so that means if you're taking a buy here, you'd have made profit. A buy here, you'd have made profit. Now, price broke through the line. As a trader, you want to, so I found that, if I just wait for opportunities for a break of trend, or we're in an uptrend, we've been trending up, I'm waiting for price to break trend, and I'm looking for entries, precise entries to take a sell if price is buying. That's what I want to explain now. So this line A here, we have a break of trend. Price has been going up, but now price broke through the trend line. Okay. Now, sometimes if you go and jump into a sell here, you see what happened here? Price came down and then started going back up. Many times you end up panicking and you close your sell. Or sometimes it goes and hits your stop loss. Or depending on your position size, your lot size, you enter the sell because you saw it broke the trend line. And then price started going back up and you started making losses, you now quickly closed. And then as soon as you close, then price now starts going in your direction. It's very, very annoying, very frustrating, very painful. So the way to get a more precise entry is not to enter a sell at the break of trend, but rather to wait for a retest of the trend line and wait for price to get rejected. So that's B here. Price retested and got rejected. So it's at that point that you take your sell. And so with that, you're able to use a tight stop loss. You put your stop loss just above, if you want to use a tight stop loss, or if you want to be a little bit more, um, take less, if you want to be, how would I put it, more conservative, I would say then, or maybe take on more risk, you then put your stop loss above the previous high. Okay, that's your invalidation point, above the previous high. But usually once price breaks above this trend line, you know so the way I do it is I'll put my own stop loss above this trend line. Okay, so that's let's just look for a risk to reward. Let's get our, okay, so you say this point is the entry point. Okay, and so usually for your take profit, you look to the left. So the previous low, that's where you want to take off some profit there, or you move your stop loss. Okay, so once price gets here, you are likely going to get a reaction. Price could possibly bounce. Okay, this other place, you look to the left, that's previous low. Okay, but usually it will come all the way down here. So if I'm putting my stop loss just above the trend line, this trade is a 1 to 5.6 risk to reward. So this is a beautiful trade setup. If you want to move it, your stop loss above the previous high, this is like a 1 to 3.5, 3.6 risk to reward. I hope it's legible. I hope it's legible. So again, going over it real quick. We said Price is in an established uptrend. It's broken trend. You don't rush into a sell here. You wait for a retest and a rejection, and then you enter your sell and just wait for it to play out. Okay, now let's look at a real life example that happened on gold. Real life example that just happened on gold. What we see here is we have our established uptrend, right? We have our established uptrend, and what do we see happen? We see that price broke through and came back but got rejected by that same trend line. Price got rejected by the same trend line. Okay, and so at that point of rejection, that's where you take your sell. Okay, that's where you, if you had rushed to take a sell here, as price started going back up, you start to panic. But if you waited for a retest of your trend line and put in your sell there, okay, and then use a small stop loss, your risk to reward would be a lot better. So you'll be risking very little to potentially make a lot. Let's get our projection tool. You see here, we could have just brought our stop loss above the trend line. If we're targeted just this previous low, we're targeted just this previous low here. This is a 1 to 2.6 risk to reward, which is good. You're risking a little to make 2.6. But if you're going all the way for full TPs, aiming for this previous, aiming for here, you see, if we decide to aim for that full TP, this is a 1 to 7.9. Let's call it a 1 to 8 risk to reward. That's a banger trade. Banger trade right there. So this is the better way to find your short entries when you're doing the break of trend. And these opportunities, they show up, from time to time. They are very frequent setups. Now there's sometimes when price will break below and then it will break back above. And you've entered your sell, and then it hits your stop loss. It's fine. At least the important thing is that you didn't risk too much. Okay, so depending on your account size, you're risking anywhere from, depending if you're very conservative or if you're trading a prop firm, you're using 0.5% of your account. It hits your stop loss, fine, no problem. Just hold on. Or trade it on the bigger time frames. But if you're trading on the larger time frames, then you have less trades to take. In a week, you may not be taking more than 1 or 2 trades. But it works on all time frames. It works on all. Okay, now there are some things that make your trade setup to have a higher chance of success. Okay, in this particular example, it's important that you know how to identify your key levels. Okay, it's important you know how to identify key levels, areas of support and resistance. So if you see this line that I just introduced here, you would see that this is we have multiple touch points. Okay, multiple touch points. Multiple, right? And so when price broke below here, this trend line was coinciding with a key level or a resistance. So you have two factors resisting price, increasing the probability of success for your trade. So you want to first identify your key levels, mark out your chart with your key levels. And then once your key levels are in place, begin to put in your trend lines. Okay, begin to put in your trend lines and you have a higher. So the more confluence you have, the higher your rate of success. Some of you who know how to use EMAs, so maybe you also have an EMA, maybe the 50 EMA or something that's also above price. So you then have 3 things. You have the trend line resisting price, you have the key level, and then you have your EMA. Beautiful. Or maybe it's your RSI, there's different things, but just know that the more confluence factors you have, the higher the likelihood of success for your trade. Hope this made sense. Drop your comments, like, subscribe to get more videos like this.